Okay, welcome to this seminar or information sessions for the CAIA examination preparatory course, right? And the coming examinations will be held in 2020 March, okay, which is about 3 months away. All right? Yeah. I be the trainer for the level 1 course. A bit of my background used to be in the fund management business, and also have some exposure to deal with various types of alternative investments. And what we are going to talk about today, I think firstly we spend some time to have an overview of the market. Okay, what we are going to learn about, what we mean by alternative investments, what are the recent market trends, and then the exam. Okay, and what is the curriculum? What does it include? Where are the focuses? Okay, and what is the format? What are the requirements? And what are the fees? Yeah. And then I have extracted a few slides, right, from our classes. Yeah, so that to give you a flavor. Yeah, when you come to a class, how would it be like? Yeah, and how we go through different concepts and what kind of materials that we are going to use to facilitate your learning. Yeah, I think facilitate is the key word here. Yeah, there are so many different ways for you to prepare for the examinations. Okay, and different people have different background. Yeah, they might have different preference. Yeah, how to prepare, and our roles here is to help you, to facilitate you, so that you can speed up your learning, understanding. Yeah. And then I'll pass to my colleague, and she will go through more details as to the courses, the programs, the materials that Kaplan can provide to you. Okay, let's talk about AI, alternative investing. There's so many different definitions, yeah, and there's no one official definitions globally, I would say, yeah. But most people just think about if it is not traditional investments, so it should be alternative investments, right? Alternative investments. And who invests in alternative investments? Here we have retail products, and we have insurance company, pension funds, government investments in the infrastructures, and on and on and on. All these pictures, nice pictures. Oh, they haven't got it right. Okay, it doesn't matter. Yeah, you got the ideas here. And here it says that it has gone mainstream. Yeah. For me, the amount of money gone into the AI markets obviously has been growing in the past few years. Okay, has been growing, and of course it is not a straight line. Yeah, some years that it has better growth, and some years it's a bit flat. But overall, in the past few years, it has been going up. We had a pretty choppy decade in the past 10 years. Right after the Lehman crisis, the market has been intervened by various government policies, and quite a lot of investors are looking for alternative way, yeah, to invest their monies. Why? Have you thought about this? Yeah, why do we see the growth of the alternative investments? There are two sides of investment, right? One side is to make money, yeah, to enhance your returns. And the other side is to mitigate your risk, yeah, to mitigate your risk, the risk and the returns, right? And by now, I think a lot of people would agree, or might be, if you just pay attention to these various interviews with these investment masters, they will say that the valuations of most markets are stretched. Yeah, peaking out. Yeah, well, they have been talking about this for a couple of years already. Yeah, but that is a matter of fact that we see the valuation of the markets are pretty high. right? No matter we are talking about equities or fixed income, right? Fixed income, the interest rate is at the all-time low, and how much more that it can go lower? Not much scope, right? Okay, so the other way that you can go is to going back up. If the yield goes up, the bond price comes down, right? Yeah, that is the normal case. So the traditional investment or the traditional asset allocation, yeah, into the traditional investments, equities and bonds. Yeah, if you're aggressive, you put more money into equities. If you're conservative, you put more money into fixed income. And nowadays, what do? Yeah, in the past, if you're somewhere in the middle, okay, 50-50, or maybe 60-40. Yeah, but can you still stick to these asset allocations? It would be a bit not very comforting. Yeah, and that's why that no matter it's retail investors or institutional investors, they all started to look for alternatives. Okay, alternatives. So alternative here, we have hedge funds, real assets, private equities. So all these markets have been attracting monies, right? I'm not saying that these are the top performing markets. Yeah. Well, sometimes alternative investments is not supposed to be the top performing. Okay. Yeah. As I said, there are two sides in investing. Yeah, sometimes you use the alternative investments to mitigate your risk. Okay. And that's what quite a lot of these institutional investors have been doing. Put money into hedge funds, real assets, and private equities, and less so on commodities and managed funds, but still growing area. So that is the case for the growth of AI. And here it is the AUM, the asset under management within the AI markets. Hedge funds, private equities, these are the core of AI, right? When people talk about alternative investments, mostly they either refer to hedge funds or private equities, okay? So these two areas, well, accounts for the most of the AUM in the AI markets. But then again, you can see that the hedge fund growth is just, well, is kind of flattish in the past few years, right? I think there are a lot of competition in the hedge funds, and some of these stellar hedge funds managers, they close shops. They return the monies back to their customers, saying that the market is going through some kind of unprecedented period of turbulence, and they cannot fuel the market as what they did. So they return the money to the customers. But still, of course, there's some new money coming to the new managers. So hedge funds just kind of maintaining, yeah, the market size. And what has been really growing is, well, private equities. You see, private equities is a pretty good growth area, yeah, particularly in the Asia-Pacific regions, right? And then again, it also comes to the valuation issues. Most people saying that the values of the PE opportunities in the United States are getting less and less. Yeah, it is very difficult to find bargains over there. And that's why you see a lot of these PE managers from the States and also from Europe coming over to the Asias and looking for new deals, sourcing new deals, right? And of course, it is not that easy. Yeah, there are a lot of these opportunities in the PE markets. Actually, it is very local in nature. If you're not the local people, it's very difficult to source. Examples is the SOE restructuring in China. If you are not the local Chinese, if you don't have the relationship properly, it is quite difficult to source the good bargains, yeah, in those areas. But anyway, it is a growth area within the AI. And apart from this, there are some other green shoots, new area of growth in AI, which here I think this one, infrastructures. I think infrastructure is also attracting quite a lot of new money. At the same time, is real estate. Yeah, quite a lot of new projects. Yeah, coming out, It's something that we are going to learn in the CAIA curriculum, that how we can use this, the alternative investments, is kind of to complement the traditional investments. Okay, and this infrastructures, real estate are good examples that if you use it to invest in the fixed income bonds, of course the intention is looking for some steady income and probably not much risk on your principal. Yeah, but nowadays, can you still do that with the fixed income investments? Well, it depends on what type of bonds that you're investing in. Yeah, so in order to get yourself more choices, and you have to look at the AI area, particularly in real estate. Real estate, you got this rental income for good quality properties, and in a way, it is a fixed income type of investments. So the question is, how do you incorporate this type of AI, yeah, to complement with your existing investment portfolio? So that is the situation. Next, well, basically, it is it gives you an idea, yeah, that the institutional investors, yeah, they have investments in all these different kinds of AI. Okay, private equity, hedge fund, real estate, and on and on and on. And most of them, well, here is, well, around half, yeah, about 1 out of every 2 institutional investors would have investments in either PE, hedge funds, or real estate. Yeah, these are the core part of the AI investments, and less so on infrastructures, private debt, natural resources. But as I said, these are maybe new area for them to consider to put money in. Just to add on to that is 20% or more private equities, hedge fund, real estate. For those institutional investors investing in this AI, yeah, they are quite, some of them investing, well, more than 20% of their portfolio into the AI. Yeah. Well, if you go back in time 10, 20 years ago, yeah, people were just testing out AI, and probably they will allocate about 2-3%. I have 100 million, maybe I can try out 2 to 3 millions in AI. But now, of course, the allocation is getting bigger and bigger. Okay, so that is the case with the institutional investor. And CAIA, CAIA was established in 2002, right? Well, currently, it's the second largest investment organizations. Okay, not investment organization, associations, right? For investment professionals. Pretty good growth as well in terms of the membership. Here, sorry about that, we got this pretty outdated figures. Up to 2017, membership worldwide, 9,000 people. Guess how many are there now? By the middle of this year, 2019, CAIA membership has already exceeded 11,000. Okay, is going to 12,000 now. So you can work out this compound growth rate, which is pretty impressive. Yeah, and out of this 11,000 members, of course you can imagine most of them are in United States. Okay, around 55% in United States. Yeah. But then again, if you look at it from the other side, it's quite a lot of people is outside United States going for the CAIA qualifications. In Asia Pacific, we have about 13% of the total. 13% of the total, around 1,400, 1,500, that kind of numbers in Asia Pacific. Not many, I would say. Well, in terms of the growth, it has been quite strong. Yeah, but still, if you look at this, the growth of the PE in Asia, and also the other areas like infrastructures, that kind of growth, actually 1,500 people qualified. I think there's still a lot of scope to go. Yeah. Okay. taking the exam, yeah, of course, is good for the career. It is not from me. This slide is from CAIA. Yeah. So CAIA consider that their examination curriculum is updated, relevant for people working in the AI industries, or also for people they have the intention to join the industries. So, so in the past, I have students like they are not yet working in the AI, yeah, but they have the interest, yeah, to find out whether it is suitable for them, yeah, whether they can join the industries with the CAIA qualification, and that should help. And of course, there are many others that they are already in the investment industries, okay? But one characteristic of the students in the Asia Pacific region, and particularly in Hong Kong, is that the background of the students are quite diverse. Yeah, if you look at the membership in the United States, well, most of them are really working in this, the industries and doing this investment management and analysis. But here we have students from of course, there are students from the areas that they're already doing this investment analysis functions, but also other students that they are from not necessarily from the front office, yeah, not in the front line. They could be supporting staff, yeah, supporting staff like asset management house. They have a lot of this supporting staff for them to helping the company to pitch for new business. Then you have to do all this kind of request for proposal, yeah, RFP, and handling the client's queries, and looking at the reporting, all this, right? Not necessarily from the front office, but also from the mid office, also from the back office, and also some people from the compliance office, yeah. The compliance officer also needs to know what these are, yeah, if their company investing in this type of investments, so that they know how to regulate. Okay, so it is quite diverse in terms of the students' background. And the exam, level 1 and level 2, as well, I presume you should have some ideas already, right, for the exam coverage. Level 1, we have this professional standards and ethics, right? Well, basically, is the rules that we should follow as a member or as a candidate of the CAIA, in how we should behave, yeah, how we should take care of the relationship with our employers, with our clients, and also how should we do our work. Yeah, on what basis? So these are the standards and ethics, and for the rest, here, yeah, it is basically, I would say it is very much on the knowledge, comprehension of a lot of different facts, right? Yes, level 1 is basically is about understanding of different types of alternative investments, different types of AI products, and how these products work in the market. Okay, and these are the products that we are going to go through: real asset, hedge fund, private equities, and structured products. And on top of this, of course, we have this introduction to AI, yeah, which doesn't tell us a lot, right? Introduction to AI, what is it? Well, basically, what it is, of course, we are going to learn the characteristics of AI, yeah, and some of these tools help us to look at the returns, the performance of different AI, and then we look at the risk measures, yeah, how to measure the risk of different type of AIs, yeah. Then we put them together, yeah, how to measure this risk-adjusted returns, yeah. To a certain extent, it might overlap with the traditional investments, okay. And also, we are going to cover some statistics, like how to test a hypothesis, right? That is something that you might have learned in your first degree in universities, yeah. And that also applies in level 1, yeah. And apart from this, we have the different type of AI strategies. And lastly, it is kind of putting them together in a portfolio management context. How do we measure the portfolio performance? In particular, is whether the performance is market-based or skill-based. So as you can imagine, if we talk about AI, yeah, we should expect the fund managers produce skill-based returns. Okay, if we only want market-based returns, well, we can stick to the traditional investments. So that is the framework for level 1. Just maybe a few more words on the level 2. Yeah, level 2. Well, basically the core is still the same, but they just to drill down deeper. Yeah, they require a deeper understanding for each type of AI strategies. And there might be some issues that will be introduced at level 1. But coming to level 2, these issues will come out again. Yeah, the issues will be more than just the introductions. Yeah, we will look at the issue from different aspects and see how it can be solved. Okay. Okay. And one thing which is different from the level 1 is there's a new topic here, is the current and integrated topics. Yeah, which makes sure that the curriculum of the CAIA examination is updated. They will put into the curriculum some white papers of the industries, just to let the candidates have some updated knowledge of what is happening in the market. Yeah, let's say, I don't know, it's some kind of new product trend in the market. In the past, we talked about private equities, and recently there are more investments going to private debt. So what is it? Private debt market. So that type of topic will be included in this current and integrated topics. Okay. And the format. Multiple choice for level 1. Okay, you got 100 multiple choice for 2-hour sessions. Having finished the first section, you can take a break, maybe for half an hour, then you come back to do the second sections, and other 100 multiple choice for 2 hours. Okay, so you have slightly more than 1 minute per questions. Okay, what it says here is heavily quantitative. I have to say it is it's very subjective. Yeah, it depends on your background. Yeah, some people might say, well, it is quite quantitative. The calculation is, well, quite technical. I haven't seen it before. But some others find it is, well, it is quite straightforward, just an illustration of the concept. Okay, so whether it is heavy or not heavy, well, it really depends on you. And later on, I'll go through some slides, yeah, to let you have a flavor as to how quantitative it can be. Okay, and also for level 2, you have this 100 multiple choice questions for the first sessions, and for the second sessions, they change the format. It is 3 essay type questions, so you have to really pick up your pen and then write down your answer. Fees. Okay, so any one of you have already registered for the exam? 1? No? 2? Okay, so you got the early bird. Yeah, you got a discount. Okay, good investments, right? And the standard deadline ends in the February of 4th, so you still have time. Okay, sessions for level 1 will be held in the first 2 weeks of March. Yeah, level 2 will be the second and the third week. Okay, so in terms of the fees, well, first level altogether 1,650, and going to the second level you pay another 1,250. Well, roughly about 3,000, and might be, well, plus a bit more, yeah, for your other expenses. So that is what required for the fees. The pass rate, 55 to 65% in the past, roughly. Yeah. Level 1 pass rate has come down a little bit in the past few exams, right? Around 54, 52, yeah. But I think it is natural. When you get more and more people coming to this CAIA, yeah, and there could be some fluctuation of the qualities of the candidates, right? But once you've gone through the level 1, obviously level 2 is, for those that they have proven that they have learned well in level 1, then you take level 2, the pass rate in the level 2 is higher than level 1. Yeah, I suppose that is the case. And some people tried before, failed. Should they try again? I don't think there's anything particular with your failure. Yeah, as long as you're still believing that the CAIA qualifications can add value to your career, yeah, then you just stick to it. All right. So far, any questions? If no, as I said, yeah, I'm going to just give you a flavor, yeah, as to the classroom lectures of our education course. This course is quite intensive. We are going to host the course from the first week of January, of course next year, yeah, to the end of February. Okay, so it's 2 months. Altogether, I think there are 11 sessions. 11 sessions. Okay. And after this education program, there will be a mock exam. There will be a mock exam. Yeah. And after mock exam, yeah, there will be a review sessions. Yeah, to go through those questions that most students make a mistake. Yeah, so that in the mock exam you can really experience, yeah, what's it like, yeah, to go through 2-hour sessions. Yeah, actually there's two-hour sessions. Okay, so to test out yourself whether you're well prepared or not. If not, where are the areas that you need to maybe spend a few more hours. Okay, so this is the schedule for the lecture. Yeah. Well, in the class, we usually just decide the program in accordance with the curriculum requirements. Okay. For all these topics, some of these topics could go a long way, could be very technical. Yeah, but we don't have to go all the way. Yeah, sometimes for the examination purpose, we have to make a judgment as to how far we should go. Okay. For example, here, for this measure of the risk and performance, it is one of the topics included in the introductions to alternative investment sessions. Okay, this is here. Okay, okay. So for this session is an introduction to the AI, and we need to learn about this, the measures of risk and performance. Most of the requirements for this, is to describe various kinds of estimating methods when we measure something called VAR, the value at risk. Okay, we don't have to go through this in details today. Okay, but I just want to let you know that the way that we deliver the class is, okay, what the exam requires is for us to describe various methods of estimating this VAR. So of course we have to learn these various methods, knowing what they are, and then look, there might be some areas that you need to apply. Yeah, you don't have to apply everything. Yeah, here we say that you only apply one of the approach, which is called parametric approach. So when we apply, it could be a qualitative questions or it could be a quantitative questions. Okay. And also we need to apply this risk measure not just on individual AI, but also in a portfolio perspective. Oh, it's better now. Now we can see the full picture. Okay, so based on the requirement of the exam, okay, this is what they call the VAR, value at risk. So basically, it is a measure of the loss. Yeah, loss, we have to put it into the right perspective when we describe loss, right? Loss is, before we say how much, we have to say within what period. Is it 1 day, 1 month, or 1 year? And then, what is the chance that I might suffer this loss? Okay, the period, the chance, and then what is the amount of the loss? Okay, okay. So we cannot compare the 1 day loss with 1 month loss. Yeah, we have to compare like with like. Yeah. So the VAR is a very useful measure. Yeah, particularly for most of the financial institutions and the investment houses. So for this, well, we said that there are various approaches. One is historical, one is Monte Carlo, and the next one is parametric. All these are the various ways to estimate the VAR. Okay, and for example, if we want to describe historical approach, yeah, it says that the key is to rank the historical, because it is a historical approach, the historical performance. It could be from the best to the worst. Okay. For example, if we use 1,000 days of returns, so we have to rank. Yeah, maybe the best results is like this. So of course it is positive. The worst result could be like this. It is a loss. Okay. So there are altogether 1,000 days of performance. So we have, I don't have to draw 1,000 lines here, but I hope you can get the pictures. So we just rank all these different performance, and then sometimes we make loss, and sometimes we make big loss. Okay, so it is from the best to the worst for this 1,000 days, maybe 1,000 days of tradings. So from the VAR angle, the value at risk, okay, we rank from the best to the worst, and then we have to make sure that all these are daily return. So within a day, the best I can get is here. Within a day, the worst I can get is here. Okay. So what is the 5% worst performance? So if there are altogether 1,000 days, yeah, according to the historical performance, the worst performance, this is the worst 50 day. In other words, there are 950 days of trading. My performance is better than here. So if I look at it from that angle, I have 95% confidence that my performance should be better than this. Okay? Better. We look this way. Okay? This is better. That is worse, right? So coming back to the concept of the VAR is, if you look at your historical track record, right? What is the 5% daily VAR, which is 5% of your performance? This is the minimum loss in a day. It could be worse. Yeah, in this area, okay? That is the 50 worst, and the worst one is here. It's much worse, okay? So this purely based on your historical performance. So based on historical performance, we are going to find out, okay, we don't have to go to the extreme, okay? Might be for the bottom 5%, you tell me what it's like, okay? So we just rank all these historical results and pick out this 50th worst performance day result, and we call it the VAR. So it is one way, only one way to estimate the VAR. There could be other way, like Monte Carlo, which is a simulations, and then parametric VAR. Well, parametric VAR is assuming there's a normal distribution. Okay. So in these sessions, we'll talk about some statistics, different types of distribution, and making assumption on distributions. We can do some calculation as like this, the VAR. And based on this assumption, we work out this parametric bar. And it is another way to estimate the bar. Okay, I'm not going into details today. Yeah, but I just want to tell you there could be a few ways to estimate this risk measure, and the exam requires us to describe, to know what these different methods are. And some of these methods, like this parametric bar, we might be required to apply. So there could be some calculation in the exam questions. Okay? Yeah. And in the class, we might do some examples, like this one. And lastly, for the VAR, if you remember, the exam requirements wants us to put it into a portfolio context. Yeah, because, well, most of the time when you do investments or when you manage money for your clients, you don't just invest in one thing, right? You put it different things together, and this is what we call a portfolio. So when we have a portfolio which has more than one asset, for example, there are two assets, yeah, how do we measure the total VAR? Okay, so we have to understand all this covariance, correlations type of calculations, right, in order to work out the total VAR. Again, there are some end of topic questions that we will go through, yeah, in the class. Okay. So that is the quantitative bit of the exam. Quantitative bit, yeah. And to give you more ideas, that's another thing. Following this measure of the risk and performance, the exam also talk about various kind of derivatives. Yeah. So as part of the introduction sessions, we will also talk about, well, here is the options. We are required to understand the long and short position of options. Yeah. What are the characteristics? Options can be a call, can be a put. Yeah. And then what are their key characteristics? So when we put all this together, long, short, call, put, what could be the effect? Okay, these are requirements of the exam. Okay, and to make it more interesting, spread, combinations. Yeah, once that we understand the building blocks, then we put them together in different fashions. Yeah, for example, spread. Yeah, what is it? Yeah, we have to define. We have to tell. We have to learn and be able to tell what is it. Okay. And then, to a higher level, to discuss. Yeah, if the client wants to have that effect, what should be the combination of the call and put positions? Okay, so in a way, it is kind of applying. Yeah. So this is what I was just talking about. Yeah, to understand the characteristics. Yeah, characteristic of a long call options. Okay, so for example here, a long means that you own something. Okay, you own something. So what is something here? Yes, when you long a call, you own a right to buy, but you have not bought it yet. Okay, you have the right. Yeah, when will you exercise the right? So in this case, you pay a premium. You pay a premium to buy the call option, and therefore, in terms of the profit, yeah, you should be making a loss, yeah, because you already pay, and that is your cost. And here is the underlying, could be a stock, could be a bond, could be whatever, the price. You pay this premium in order to enjoy the upside of the underlying. Okay, but you won't be able to enjoy the underlying upside until the underlying stock price gone beyond the strike. Okay, for example, if we are talking about stock price, it could be you pay $1 to buy a call option, you long call, by paying $1 as a premium, okay? And this, the strike price could be $10. So as long as the stock price is below $10, you're making a loss of $1 in this region. But once that the underlying stock price has gone above $10, that means that you can buy the stock for $10 for something which is worth for more than $10, and that is your upside. Okay, so that is the long call options characteristics. And if you turn it upside down, it is a short call option characteristics that, again, there's a premium, but this time because you're short, so that is the premium income. That is what you can get from these strategies. That is your upside. Yeah. In return, yeah, you are facing a downside potential. Yeah. Because you sell a right to your counterparty, and your counterparty, if the stock price goes up, they will exercise the right to buy something from you at a lower price. Yeah. Therefore, you will face the potential downside. So that is the call. And similarly, you can have a put. Yeah, put is you own a right again, but not to buy, but this is to sell. Yeah, why do you want to own a right to sell? To sell at what price? To sell at the strike price here, at a predetermined price. So if the stock market tanks coming down, everybody's are making loss. And if you have a right to sell your investments at a predetermined price, well, which theoretically should be higher than what the market price now. Therefore, you have a downside protection. Okay, so long, short of call, and here is long put, and that is the short put. Okay. These are the building blocks. These are, well, I presume it is not technical, right? It is fairly easy to understand. Okay, fairly easy to understand. Yeah, but what is difficult to understand is when you try to put them together. When you try to put them together, right? This is option strategies. And here, when we put them together, this is a short call with a long stock, okay? I short call, and then along the underlying stock, and the net position will become like this. Okay. I'm not going to go through all this graph here, but you should be prepared that no matter it's level 1 or later on in level 2, yeah, you will be getting more and more messy. Yeah. We just talk about the building blocks: long, short, call, put. Okay. Now we add this long, short, call, put positions together with the underlying stock to come out with different profile. And here, well, I think if you haven't studied it before, yeah, you should feel a bit messy now. Yeah, spread. I long a call here. I short a call here. Okay, my payoff will be kept in these regions. That means I have a view on the price of the underlying. Yeah, for example, the stock, it might go up. Currently, it might be $8. It will go up to $10. Yeah, but not much further. So, ideally, I can buy a call with the strike here, $8. And then I sell you a call with the strike at $10. So, I can earn the maximum, the $2 upside. Yeah. If the stock can go any further, okay, the further upside will belong to you. But I don't believe that you can go further. And therefore, I apply this bull spread strategy. Okay? It's not a plain vanilla call. And of course, there are some advantages with this spread strategies, and that is something that we will discuss and go through in the class. Okay, again, usually Yeah, after each topic, we have some end of the topics questions to go through, checking that we have a good grasp of the concept here. Yeah. For those that you have studied this derivative before, might be you can make an attempt on these questions. Yeah. I can tell you the answer is C. Okay, any other questions?
So normally, how long it will take to pass level 1 and level 2? Within 1 year or?
December now. If you can take the level 1 in March, well, you will get your result within 1-2 months. Yeah, then you will be just in time, yeah, to register for level 2, and the level 2 will be held in September.
So within 1 year.
Yeah, if you got everything ready, yeah, you got it right, you can get the qualifications in 1 year. But according to CAIA, usually it takes about 18 to 24 months, roughly. Because some people might, okay, I take the level 1, yeah, but I don't want to rush. Yeah, maybe I'll give myself more time for preparation. Okay, fine. Okay, but if you really want to get it as soon as possible, okay, 1 year's time can be done. Yeah, and that is one of the reasons why some people go for CAIA.
Yeah, I think so.
Yeah.
I know like CFA can take like 3 years.
At least.
Yeah,
Yeah.
exactly.
Yeah.
So is that possible? I can both take level 1 of the CAIA and also take the CFA as well, like at the same time?
Well, the exams are held at different time.
Yeah, exactly.
Yeah, CAIA level 1 March, and then CFA level 1 in June. Yeah. Okay. Yeah. Well, it really depends on yourself, your commitment. Yeah, your schedules. Yeah. Or some people that well, in the past I got some friends that they really do these things pretty crazy, that they have to work 6 days at least a week. Yeah. And probably they just sleep about 3-4 hours a day. Yeah, sleep. Yeah, I can't do that. I can't do that. Yeah, yeah. It is too much. Yeah, I think it is. It might not be that appropriate. Yeah, to rush yourself. Yeah. Yes. There are some overlap. Correct. Yeah. But I think the question should be whether the CAIA qualifications or the CFA qualification is more suitable for your own career development, and whether you have the sufficient time or other resources to be committed, yeah, for the exam requirement. So it is a balance that you yourself should strike. Yeah. But of course, if you're coming to the topics, apart from the overlap, yeah, there are also something which is in the CAIA curriculum, but not in the CFA curriculum. Yeah, they drill a bit more. For example, is due diligence. Yeah, due diligence is pretty important for AI investments. But for CFA, well, they talk about it, but not to that extent. Yeah. All right. Yes. Well, I can tell you in terms of the membership, yeah, CFA membership is larger than CAIA. Yeah, you exactly. Yeah, yeah. But both of them are well-recognized professional qualification in the investment industries. Yeah, yeah. Okay, then I should pass to my colleague, and she will give you more details as to our offerings in terms of the classes and also the study materials.